When we speak about the stock market, most people think that the only way to make money is to buy shares of a company. Then we hold the shares for some time and sell it when it goes up, booking the profit. Let's talk about our favorite Indian company, Reliance. The last price of Reliance is 1,328.65. It went down roughly around 4% in the last Friday. Yeah, because of current fears of coronavirus. So, if we buy 50 shares of Reliance, it will cost us 50 into 1328, which is around 66,400 rupees. Let's say we will book loss if it breaks 1280, and we will book profit if it touches 1500. So simple, right? So in this case, we are risking roughly around 48 points to gain profit of 172 points, which sounds fairly reasonable in the terms of risk and the reward here. Also, we can see the levels in the chart here. So, let's say, with the help of Lady Luck, it hits the target. In that case, we will make a sweet profit of 8,600. As you can see here, it is a fantastic return of almost 13% in the capital of 66,400. Right? So, this is one of the popular methods of making money in the stock market, which, as most of you know, as trading in shares. What if we do not want to play this game? Like, how are we supposed to make money if the market keeps moving sideways, or let's say the market keeps moving downside? Now, we can definitely bet that it will fall to downside using futures which have higher risk and reward, but there is an interesting case where we can bet on a range. Like, let's say, what about Reliance will not fall below 1280 or Reliance will not go above 1500 before March ends? We are just translating our previous bet in a more easier manner. Now, we can say 1280 looks too near. Well, in that case, let's make it 1200. This is called betting on a range. Now, we have got many questions. What is the amount of money needed to do these types of bets? What is the percentage of profit? What is the risk compared to the returns? To see that, let's explore the margin calculator offered by the broker. Select options under the product. After that, select Reliance of March expiry under the symbol. The option type is already selected to call options. So, we do not need to change there anything. So, lastly, in strike price, let's type 1500. There is a minimum quantity when it comes to derivatives. As you can see, for Reliance, it is 500. We refer 500 as one lot. You can see the lot size is also written here. We are not changing anything into that as of now. Choose sell. And then click on the add button. So, as you have interpreted, selling Reliance 1500 call options for March expiry means we are betting that Reliance will stay below 1500 at the end of the March. Similarly, let's add 1200 put options to the margin calculator. We have to select the option type as put options and write 1200 in the strike price. Then, click add. As you can see, it roughly takes around 2 lakh margin. For our own safety, we need to have some free margin as well. So, let's assume margin taken is 2.5 lakh. Now, we are also getting margin benefit. Because our bets are the opposite of each other. One is betting it will stay below 1500. Another is betting it will stay above 1200. And, on top of that, we will make good money if Reliance ends between 1200 to 1500. So, let's check how much money we will make in what conditions. To start with, let's check the prices. As you can see, Reliance 1500 call options of March is priced at 6.5. And Reliance 1200 put options of March are priced at 14.4. Let's check at the options calculator we have made in the house. Let's put the values and calculate. 500, 500, call, put, 1500, 1200, 6.5, 14.4. And here we go. So, if our bet goes correct, we will make 7,200 from the put options and 3,250 from the call options. So, net of 10,450. It is roughly almost 4% of the employed capital. Not bad. Now, if you really have just 2.5 lakh, we do not like to recommend to touch stock options. What if some important news comes in context to the company? There are many cases where huge swings happen. As you can see in the chart, here is a recent case of Aura Pharma with huge swings. That kind of volatility is bad for a small capital. In a big capital of, let's say 10 lakh, we can keep this as one of the strategies at maximum. So, for small capitals of 2 lakh, it is better to stick with index options. Bank Nifty is an index that tracks the stocks of Indian banks. Indexes are already made of a basket of good companies. Indexes are considered as a benchmark. So, it is very safe than normal stocks. Other than that, another good thing about the index is, it has weekly expiries. That means, you can bet on the short term. It is less risky to bet on a range on a weekly view than a monthly view. Because, the more time it is there, the more unpredictable it will be. So, as of now, in India, stock options always expire on month's end only. But, indexes have expiry every week at the end of Thursday. The current price of Bank Nifty is 29,147. Similarly, like Reliance, what if we bet on a range here too? Let's bet Bank Nifty will stay within 27,600 and 31,000 till the end of this Thursday, which is 5th March. You can see the date of expiry in each options here. Stock options expire in the last Thursday of the month. We call that monthly expiry. In this case, we are only taking the headache of 1 week instead of entire month. If Bank Nifty ends within these green lines, we will make money. So, if our bet goes correct, we will make 1,700 from the put options. And 270 from the call options. So, the net of 1970. It is roughly almost 1.3% of the employed capital. Not bad. Now with 52 weeks, it is 69.33. Let's assume some huge losses happen few times. Also, we need to deduct brokerage and any other charges by government and broker. Let's assume the worst case and deduct 50%. It will make it 34.66%. Now deduct 30% more from it. You will get a realistic value of 24.27%, which will look quite fair based on our current assumptions.